Good morning. Welcome to Stock Market Today. It's Wednesday, January 8th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today where you can sign up for a free email, where we get a lot of the content for this show, as well as give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So U.S. equities closed mostly lower on Tuesday as investor attention remains on geopolitical tensions between the U.S. and Iran. All sectors finished lower on the day. Comm services was a relative outperformer, while REITs were the biggest decliner. Treasuries were mostly weaker, with the curve steepening. The dollar was stronger against the major crosses. Gold finished up 40 basis points. WTI crude was down about 90 basis points, but off the worst levels of the day. As we get to the desk this morning, futures are trading higher by about 20 basis points. Asian markets were weaker overnight, with greater than 1% declines in Japan, China, and South Korea. European markets are mostly weaker, but off the lows of the day. Treasuries are stronger, with the curve flattening. Dollar stronger against the yen and euro. Gold up 60 basis points. WTI crude relatively flat. There was news overnight that Iran had launched missile attack on U.S. military bases in the Middle East, and that sent futures lower. They've subsequently reversed course, though, as Iran's foreign minister said that the country had taken proportionate measures in self-defense and didn't seek to escalate a war. All right, so what does that all mean for the structure of the S&P 500 with everything that's going on? Geopolitical concerns obviously remain a key driver, and stocks are traded lower yesterday, and we've had kind of this choppy consolidation to start the year. We still have near-term support in the 3150 to 3200 range and resistance at around the 3250 level. RSI is in bullish ranges, but no longer overbought, and Chaikin money flow does remain bullish. This is why we highlight these key levels of support. Right, a lot of news headlines, a lot of opportunity to make emotional decisions. But if you've identified the key levels of support ahead of time, you don't have to react and respond to those headlines and make emotional decisions in the face of uncertainty. Market continues to hold above these key support levels by our short-term metrics. Markets are nearing oversold points. I think it makes sense to start looking for some names that have come under pressure, leading stocks and leading areas of the market that are now oversold and have bullish money flow. That's the strategy that we continue to advocate here in the face of headlines. And as always, not just now, but always manage your risk, right? I always tell our clients that you should know where you're getting out before you're getting in. Set your stops and let the market dictate your next steps. Let's turn to our market in a minute now. What are we writing about today? Well, geopolitical tensions in the Middle East lead to choppy near-term trading. That's really been the case since last Thursday. Major market ETFs remain near record highs. We're talking about the SPY, the Qs, and the IWM. And by our work, our overbought, oversold indicator, they are nearing or at oversold levels. Sentiment is more greedy than fearful following that year-end rally, and that's kind of one of the one headwind that I can see here from a technical perspective. The pullback in regional banks, we think that presents an opportunity. We'll touch on that a little bit later in the show. And as I said, futures point to a higher open here today. Turning our attention to the major indices from a power bar perspective, a little bit of deterioration over the past few days. The Dow was down 43 basis points yesterday, and that swings the power bar ratio to a bearish tone. 4 bullish or very bullish stocks for 7 bearish stocks there. S&P 500 down about 30 basis points, 112 to 79 bulls to bears. The NASDAQ was an outperformer, down slightly, but let's call it relatively flat, and an outperformer on the day on the back of strength in the semiconductors, 23 to 12 bulls to bears there. Small caps were a slight underperformer, 665 to 248. So deterioration continues in the power bar ratio for small caps, but it does remain skewed in favor of the bulls. Bonds downticks sent yields higher. According to the Chaikin power bar, small cap stocks and large cap stocks are bullish. Major markets are mixed. Let's hit our stock of the day. And it's one of those regional banks. East West Bancorp. Remember, this is auto-generated based on the power gauge rating. East West Bancorp, EWBC, closes at 47.67, down 81 basis points yesterday, but that very bullish power gauge rating is due to very attractive financial metrics, very strong earnings performance, and very positive expert activity. So when we take those 20 factors and crunch the numbers overnight, we come out with a very bullish rating for a stock that's in a strong trend, above a rising long-term trend line, and in a strong industry group. We've been talking about the banks. The banks have been strong. They continue to be strong. We actually see a little bit of a pullback here as an opportunity opportunity. Ribbon at the bottom of the screen here tells us where the rating is and has been over the past 12 months. We can see we're on that very bullish rating. It's green. And we're outperforming the market. Stock has become oversold with bullish money flow. Actually triggered one of our buy signals today, an oversold buy signal. So I think there's an opportunity in a name like East West Bank Corp. If you're looking for leading stocks in leading areas of the market that have become oversold with bullish money flow, sounds a lot like the process that we advocate. Here's a name that appears to be setting up. Take a look at East West Bank Corp as a bullish idea today. And not to be outdone, we're going to take a look at another regional bank a little bit later in the show that I am highlighting in my note today to Chaikin Analytics clients. Turning our attention now to the sector tracker, movement of the major sectors over the last 5 days. Comm services was an outperformer yesterday, and it's been an outperformer over the past 5 days. We talked yesterday about strength in Google driving trading there. The industrials have started to come on of late. 1.5% to the positive side over the past 5 days of trading, and starting to see some improvements in their relative strength. Energy stocks, we've been talking about it. Fundamentals remain bearish, but the downtrend does appear to be less severe. Maybe there's a potential change taking place here. Not quite ready to sound the all clear on energy yet based on our work, right? XLE and the industry ETFs are still bearish here at Chaikin Analytics. It's hard for me to get excited in the face of that, but at the very least, we could see the downside momentum has certainly started to wane. We like to see tech near the top of the list, greater than 20% weight in the S&P 500. Thank you, semiconductors. Discretionary rounds out the group of 5 sectors that are positive over the last 5 days. Healthcare, fins, utilities are middle of the road, all slightly lower. Staples, REITs, and materials lagging. We talked about materials yesterday, big relative breakdown. I don't see any reason to get excited or go bottom fishing on that relative trend in the materials group just yet. Also, it's encouraging to see that even in the face of rising geopolitical tensions, the defensive areas of the market are continuing to underperform. Now, we've been talking about this dynamic since the October-November timeframe, where the REITs, the staples, and utilities, which had been leadership throughout a lot of 2019, starting to roll over on a relative basis. And again, if there was a time for these defensive areas of the market to reverse that relative trend, it would be now with rising geopolitical tensions. However, that is not the case. They remain underperformers. Let's look at our industry in focus now. It should look familiar to you. We've been talking about it. Healthcare services. Over the past 6 months, it's been a slight underperformer. Let's call it an inline performance. Lagged the S&P 500 by about 99 basis points. However, the power bar ratio, which measures future potential, is very strong. 15 bullish or very bullish stocks for 5 bearish or very bearish stocks. And it's currently ranked number 7 of the 21 subsectors that we looked at. It's moved down 1 slot over the past week. Now, some of the names that could be interesting here for opportunities, again, leading area of the market: Tenet Healthcare, THC, Select Medical, SEM, and CVS. CVS ticker symbol there, all with very bullish Chaikin power gauge ratings. And let's take a look at the fund here. XHS is the ETF that we look at for the healthcare services group, and it has a bullish ETF power gauge rating, and it's in a strong trend above the rising long-term trend line. Now, what I see here is a breakout and then a consolidation that's holding support at the breakout level. Bullish fund outperforming the market. Notice the personality change here when healthcare services really lagged throughout much of 2019, and then in November began to outperform, and it continues to outperform. The fund is currently oversold with bullish money flow as it consolidates above that breakout level. So to me, I mean, I like this fund if you're trading ETFs or looking for opportunities in the ETF space for leading areas of the market. I also think you want to start to drill down on those 15 names with bullish or very bullish power gauge ratings and identify some names that have the potential to outperform. Healthcare services is an area of the market where we want to look for long ideas. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers. Apache announced an oil discovery, sent that stock higher by nearly 27%. Micron and Western Digital both upgraded at Cowen and had their price targets taken higher, leading to strength in those names yesterday. yesterday. Microchip, another important name in the semiconductor space, raised their revenue guidance. That sent that stock higher by 6.7%. And Macy's, no real news yesterday, but I do note that they reported their November-December sales this morning. So watch Macy's today after a 3.3% rally over the course of the day yesterday. Loser side of the board, CAG down 3.5%. Nothing company specific there. Stars, STZ, Constellation. Nothing company specific on the news front yesterday. They did report their earnings this morning. And when I looked, the stock was trading higher. ARE announced a share offering that sent that stock lower. Noble caught a downgrade, takes about 2.8% out of that stock. Halliburton, nothing company specific yesterday. I will note that the stock was upgraded on Monday, giving some back here during the day yesterday, down 2.84% on the day to close out the list of S&P 500 losers. So let's dive into the charts now. We haven't been here on a Wednesday. I just realized since before the Christmas holiday. So coming back and giving you an update on our sentiment work. Sentiment is more greedy than fearful. There's no two ways about it. That year-end rally for the S&P 500 drove sentiment to overly bullish levels. Take a look at the top of the chart here, the 13-day moving average of the CBOE equity options put call ratio, and you can see it has taken a nosedive lower, right? This is a sign that investors have become overly bullish due to that rally in the S&P 500. And what you'll notice is that drops below this kind of 0.57 mark have tended to coincide with some choppy trading for the market in the near term. So at the very least, is it guaranteed to play out that way? Absolutely not. But at the very least, what we can say is that sentiment is no longer a tailwind. Remember back in the late summer and even in the fall, we were pointing out how sentiment was potentially a tailwind as it was getting overly bearish. Well, now the opposite is true. And take a look at the VIX, right? The VIX goes out yesterday at about 13.79. So even in the face of rising geopolitical tensions, we're not seeing a spike in the quote unquote market's fear gauge, the VIX index. So it appears that investors are deferring to the trend that year-end rally pushed sentiment levels to the point where they might have become a little overly bullish. Now, is that a run for the hills? No, but it's just kind of a be aware of what's happening in the marketplace. Market's kind of chopping around here as sentiment has become overly bullish in the near term, similar to what's played out at previous times where this indicator has dropped below this key 0.57, 0.58 mark. Now, we did say we see an opportunity in regional banks. We looked at East West Bancorp a little bit earlier. Take a look at the KRE here. This is the SPDR S&P Regional Bank ETF, so our gauge of the group in general. And what I see is a fund that was extremely choppy and a relative underperformer through most of 2019 before rallying, taking out resistance, and now we have a pullback to test this resistance zone, call it 55.50 to $57. That also encompasses a rising 50-day moving average. The fund is trading above the 200-day moving average. RSI is holding so far in bullish ranges on this pullback, and at the same time we are now testing and so far holding support on a relative basis. If we take a look at KRE, it has a very bullish Chaikin Power Gauge ETF rating, 75 bullish or very bullish stocks in this fund for only 4 bearish or very bearish stocks. So to me, this pullback is a compelling opportunity to start to drill down on some of the banks and the regional banks. Now, the big guys, the JP Morgans and the Citigroups of the world are going to start to report earnings next week on Tuesday. JP Morgan going to kick off earnings season. But I do think this pullback in the banks, as long as the KBE holds support here, which so far it appears to be doing, you want to be looking for opportunities there. We looked at East West Bancorp earlier. You might want to take a look at a name like Eagle Bancorp, EGBN. Right, this stock is the stock that I'm highlighting in my note today to Chaikin Analytics clients. Let's take a look at it from a purely technical perspective. Breakout, pullback, holding the breakout level and the 200-day moving average as the RSI maintains a position in bullish ranges. So momentum not breaking down here. At the same time, we're starting to see the stock outperform relative to the SPY. So I'm highlighting it in my note today as a bullish idea. Leading area of the market, banks. Some of the stocks with bullish and very bullish power gauge ratings pulling back, becoming oversold with bullish money flow, sets up the opportunities that we are looking for. Take a look at EGBN as a potential long idea today. I'll be back here tomorrow.